The CRA sent this person a letter who's having a bunch of rental losses, and this is what the letter asked for. The CRA asked for a detailed projection on how they plan to make the rental property profitable over time, and they were looking for a full-out financial analysis. Now, a lot of people were concerned about this because there's a lot of people holding rental properties that are generating rental losses right now, and they're worried that they can't deduct all their rental expenses. Now, I help people save taxes proactively, but when I saw this request, I thought of one thing, or better yet, one person, Stuart. Who is Stuart? Stuart was an investor who bought 4 rental properties. He put very little down on each property and took out a mortgage for most of the purchase price. Because that, he had huge interest expenses, and these interest expenses resulted in very big rental losses. And when he did his tax return, he said, you know what, I'm going to deduct all my rental expenses and my interest because I took those loans out to purchase a rental property, and so it only makes sense for me to deduct it. But the CRA saw this and they said, hold on. There's no reasonable expectation of profit here. See, CRA would only let you deduct expenses if they thought you had a reasonable expectation of profit. And based on what the mortgage sizes were and the interest expense, they never really saw a reasonable expectation of profit for these rental expenses. And they denied all his rental expenses. And Stuart didn't really like that. So he said, you know what, I'm going to take you, the CRA, or before it was called the CCRA, to court, and I'm going to fight this. And when he went to court, he actually lost, and the tax courts agreed with the CRA at that time. Now, Stuart still didn't think this was fair, so he went all the way to the Supreme Court. And the Supreme Court heard the case, heard the views, and they actually sided with Stuart. And they actually said this reasonable expectation of profit test is a little silly and should not be used. Because no one's buying 4 rental properties for fun. They're obviously buying it to earn income. So they actually replaced it with another test, basically called the commercial activity test. And essentially that test is that, would this person spend all this time and make all this investment if it wasn't to earn income? And so why do I tell you about Stuart? I tell you about Stuart because the CRA in this situation is still kind of holding on to this test. They're trying to find out if there's a reasonable expectation of profit. When in reality, it doesn't really matter if there's a reasonable expectation of profit or not. The real question is was this done in a commercial manner or was this done as a hobby? And I doubt anyone's buying a rental property as a hobby. So if you have a rental property that's generating rental losses, then pay attention to Stuart. And if you want to see what real tax planning can do for you, then follow me.